Hey guys, this is Ryan along with Patrick here from Precision Trading Labs. We are the New York City-based trading community. We teach people how to take less risk and make more money in their trading. So if you're interested in that kind of stuff, please go to precisiontradinglabs.com. And we thought we would record a video today because Patrick and I were having a conversation in the trading lab after we got done trading today after the close about the top 5 mistakes that new traders make when they get started trading. So we boiled it down to just 5, but there's probably a couple more that we're leaving. But the ones that I see that cost a lot of people money and time are the ones I kind of want to focus on. So Patrick, what were the first one we kind of hit on?
I think the first one is it's really they get too high on themselves after they've had a winner, and then conversely they get too low on themselves after a losing trade, and that's something that I think Dr. Brett Steenbarger, who's a trading psychologist, he first kind of put me onto is this idea that, after a winning trade, you're just too euphoric, you're too happy, you think nothing can go wrong, and that everything you touch turns to gold, when really, maybe you got lucky, maybe, there was something about that trade that was why it worked out. Rather than sticking to rules, they just, they start to get cocky, and then conversely, when they have a losing trade, they think, that they're terrible at this and that they should just quit. And really, it's something where you have to constantly be critical of yourself. After a losing trade, the best thing you can do is go back and say, why did I lose on that trade? What could I have done wrong? Yeah, it's almost like tuition in that way. At least you're learning from your losses.
Sure.
You know what I mean?
And I was thinking too, I said to someone once when I was the first 2 people I trained at this, I remember saying a bad trade is not a reflection on you as a person because it's just a bad trade. You feel so low. It feels like, you did something wrong or whatever, when really, if you followed your rules and you got stopped out, it's just a bad trade. Yeah. You're not a bad person and you're not necessarily a bad trader. Right. But you just get so, I would say, Mitch and I...
It's the emotions that we're talking about.
The emotions of trading. And Mitch and I always talk about, I never feel as good on my winning trades as I feel bad on my losing trades.
Right.
You always feel just a horrible low on a losing trade.
And some of the best traders I know are traders that don't get excited after a winning trade, and they don't, they treat each trade just as a trade.
Sure.
If they're right, great. If they're wrong, who cares?
Move on.
Because as long as they're structuring risk and reward in the right way, or it shouldn't matter to them. As long as they're really sticking to a strategy and they've really thought out their strategy, then one trade shouldn't make or break anything for you if you're doing this, if you're taking a long-run approach to it,
No, I agree. And that dovetails really nicely into the second one, which is no concept of risk and reward, right? I mean, it would really help. Before we get into risk and reward actually helps you overcome some of the emotional aspects of it, of trading, because
you're constantly looking for trades that are at least, say, 3 to 1, or more. You're no longer dealing with the emotions side of it. You're just looking at the numbers of it.
And I said to you when we were talking, we were making this list like a half an hour ago. It's very easy with our list, our strategy, to determine risk and reward because we know where we're getting in and we know the distance between entry point and where we want to get out. Whereas some people, they have, it's based on news or indicators and really can't measure out in an indicator if RSI is overbought and it's going to go oversold, like whenever you're going to take profit in. With us, it's a lot easier, so you can kind of know before you're planning on entering a trade what your risk and reward is. And it's really a huge benefit to the way we trade as opposed to some of the older school breakout stuff. Well, how far is the breakout going to go? You really have no idea, So the way we trade actually helps you with that risk and reward, and not having a concept of that. Even if you invent some mechanism to it, even if you trade something else like breakouts or Bollinger Bands or something that we don't necessarily do, adding in a risk and reward methodology really makes or breaks your trading.
Yeah, I think the mind-blowing thing about that concept of risk and reward and looking for skewed risk and reward opportunities where you're risking 1 to make at least 3 or 5. The mind-blowing thing about that whole concept that I think a lot of people miss because they're not aware of it is just that you can be wrong over half the time and still make money. I mean,
That,
You know,
a strategy
we've
yeah.
all heard that, you know, a monkey can be a better day trader than a person throwing
Sure.
darts at a wall, you know?
Yeah.
And it doesn't matter. Okay, so what if that's true?
Yeah.
I can be wrong 50% of the time and still make money by structuring risk and reward in a skewed manner. I think that's.
So I remember getting down on myself a couple of years, 3 years ago, and then I saw a quote from Paul Tudor Jones, and he said, "I get into any trade with a minimum of 5-to-1 risk reward. Then I only have to be right 20% of the time.
Yeah,
that's even better than 3-to-1, where you
incredible.
only have to be right 40% of the time.
Right.
So I'm starting to as my process evolved the last 2 years to trading less and getting more quality. That little quote's always chasing me in my brain. So I would say that's definitely total lack of risk or reward is something that most traders don't have.
Yeah,
a concept of it before they get into any trades.
Right.
And which plays into risk and reward is the oversizing, meaning they're trading a bigger. So if you're trading stock and you're trading, let's say for your account you have 20, 25 grand, and you're trading 1,000 shares at a clip of, on margin of what's a $75 stock or something moderate, 50 or something like that, I guess. Even the XLE is $70 a share, right? So yeah, ExxonMobil's 80 or 70. If you're trading that and you're trading 1,000 shares at a clip because you want to make $1,000 on any $1 move, you're one bad trade from just getting destroyed.
Right. But I think a lot of newbies, they don't go through that process of even asking themselves, how much do I want to lose on a trade? Everyone, that should be one of your first questions.
Yeah.
I think too many people get blinded by the upside. They just get blinded by, I could make, if it goes back up to this price, I can make $3,000.
Sure.
Well, yeah, but
if it
in the
doesn't,
effort to get there, what are you risking? What are you?
Yeah.
Where is the line in the sand where you're willing to say, if it goes below this, I'm wrong?
Exactly.
Where are you willing to admit you're wrong?
Because if you're trying to make $1,000, let's just say on a stock trade, are you only going to lose, $350 or $200 or something like that? Then fine. But even if your account, but you also don't want to be in a position where you have a smaller account, 5, 10K, and you're risking 20% of that on any one trade.
Right.
That's a real recipe for disaster. It's going to be really hard to bounce back.
At Precision Trading Labs, we have a very formulated way of approaching sizing,
for account
position
management.
sizing. Yeah, it's always based on, not risking more than 1 to 2% around there of your account size, and that way, the idea is nobody dies of 100 paper cuts.
No.
You just don't. You want to avoid getting your arm ripped off.
You die of a shotgun wound when you get one of those bad trades. And I said this to a student last night. I was always really good at not, taking on risk that was so far above what my account could handle. Meaning that I was always pretty good at staying within those goalposts here. Right? One trade, a couple bad trades aren't going to kill me. Whereas some guys are putting on, they have a $5,000 account. And every trade you're risking, 20% of that.
Right.
It's just that's not a recipe for success, put it that way.
Right.
There's another way to look at it. And then, this is a really good flow. The way we listed these out is that overtrading would be the next one. I mean, they're just too active.
Yeah. In fact, one of my favorite traders out there, his name's Peter L. Brandt. I highly suggest that you look into some of his stuff. He's very active on Twitter and stuff like that. But I saw something that he said recently that really stuck with me. He said, if you have a compulsion to trade, meaning you wake up every morning and the first question is, okay, what trade am I putting on? That compulsive trader, they're on a one-way road to ruin.
Yep.
I mean, it's being patient it's still one of the hardest things, and that's why it's not easy being a profitable, consistent trader. But you really have to sit there, be picky, only select the setups that really look good and that really fit your strategy.
If you want excitement, I think it's Mitch. He says, if you want excitement, get a hobby, find a significant other, whatever word you want to use, don't go to trading for excitement.
Right.
Go there for money.
And we've met traders that really just come in and just want to just push buttons. They like the idea of...
Well, we know one who pushes a lot. He makes money, but he pushes lots of buttons. Right. It's not a way I want to trade or a way I want to live. And I used to do that, where I was taking a lot of trades in a day. And I first started to see my significant money trading a lot. But I've also went back and looked at some of my hard days, where days I was up, nicely for the day, and I gave back 50% of that by overtrading.
Right.
Constantly, I'm up this next trade, I'm up 600 for the day. If I grab another 350, I'm approaching $1,000. That's a better day. Well, you've got to have rules for that. You got to know how many. I mean, do you know how many trades you take a day? Like consistently? Is it a consistent number?
No.
Okay, mine's pretty fairly consistent. It's like between 1 and 3, right? Across asset classes, let's say. Like, let's just say
I'm trading a little longer time frame.
Yeah, it's true. Okay, got it. Yeah, so let's just say I'm going to be quasi active in the futures market. I'm only taking 1 to 3 across all of them I'm taking, and I'm using time frames. Let's say an hour above. Give or take the occasional time I go a little bit lower. It's giving me 1 to 3 trades a day.
Right.
I'm completely fine with that. But some people have they don't know where their cutoff is.
And it's not just the fact that you incur commissions.
Yes. Oh no, not at all.
It's just you tend to. We were talking about being picky.
Mm-hmm.
You tend to throw your approach out the window if you have this compulsion to trade. If you really don't really care about the quality of the setup or the quality of the.
You're not taking that picture perfect, like, oh wow, that's my setup.
Yeah, you're more just interested in just shooting off the hip, and that can lead to
rolling the dice almost. Like the disastrous. That's a big word. Yeah, and a big worry. And then the last one, because it's the best one that I find a total lack of approach on a lot of traders. I don't mean just like people who just started yesterday. I mean people who've even been doing this for a little while. They have no consistent approach. So this day they're using Bollinger Bands. Bollinger Bands with an RSI crossover or something
or
like that.
Or even more broader than that. Some people don't even really draw the line between a technical analysis approach or a fundamental approach.
Sure.
You know what I mean? I know a lot of traders that'll kind of confuse their thesis in there. They'll say, oh, well, it pulled back to a level, and also the company's doing really well. It's this.
They're trying to sell themselves into a trade almost.
Yeah, and granted, those things could help maybe, but you have to clearly define your approach. And I'm not saying that can't work, a technical and a fundamental approach.
It definitely could, but you have to know which one is which.
Subjective.
Yeah, exactly. Yeah. A total lack of approach of when they're going to do something, right? A breakout trader should know, okay, when prices gotten above this level, I know I'm going to do this until X happens.
Right.
For us, we're waiting for the retracement. We know when a certain move has happened, and then we're waiting for that move to come back to us. It has to fit these criteria,
right?
And that's our approach, and that works for us. There's only a handful of patterns we trade, and knowing that, we can explain to someone what we do inside of 30 seconds, how we trade, as opposed to someone who's like, well, I do this sometimes, I do this sometimes. Right. Consistency for a couple of the moochers who want to come in, always like, can I do Bollinger Bands here and RSI on this one, and then can I do a breakout trade on this and all that kind of stuff?
You can do whatever you want.
Do whatever you want.
Probably not going to work out consistently.
You're not going to know you can drag X dollars out of the market.
Right.
So with the way we trade, and you have let's say $10,000 in your account, you can start to predict your income after a series of months of doing this. You can say if I get this many trades a day, risking 100 to make 300, I'll get $500 a week in extra income, or whatever number you want to see and how much active you want to be on. But with all this other stuff, it's so subjective because you can't predict what you're going to make in any trade because you don't have an approach. If you're just every time well, I might do this, I might do that. And Mitch wrote a great article a while back called Finding Religion. And it really, the point is it's not controversial about religion. I mean, they think of religion being finding your trading style, but it gets people to really think about it clearly. You find very few people who are Jewish, Catholic, and Muslim, right? Usually you pick something and you're with it, right? Same with trading. We are technicians with a focus on price action, right?
And I'll tell you, I think that was a pivotal moment in my trading career so far, is realizing that you can't just rely on luck. I kind of just got into trading at first, and I got lucky on a few trades.
Oh yeah.
And I thought I was a genius at first, until you have a couple big drawdowns, and you're like, well, if I'm going to do this for income, if I want to do this as a career, I have to find a consistent approach to doing this. I have to, so to speak, find religion.
Yeah.
To your point, and that's when I signed up with you guys, and I started the program and everything like that.
And it's funny, for one of the guys who I thought was being in the trading community in New York, you meet people and all this kind of stuff. This guy said, I'm trying this, I'm doing this, and I'm making money trading futures. And I was like, oh, great. And I've been at this for the last year, and I'm trying to get trying to get more rules. So it sounded he talked a good game, and it wasn't trying to sell me anything. He just was trying to like get better at it.
Yeah.
So he invites me. He writes an office the same way we did. We go down. I go down to his office right off of 8th Avenue, and I think we're all we're gonna be able to compare notes on stuff, right? And I go there, and he goes to his and I was like, "What did you trade today?" He's like, "Oh, I was just looking at the Dow." And I'm like, "All right, well, you're looking at the Dow. I didn't see anything there." We're supposed to have a very similar approach, almost the same. And literally, he sits down at the computer, like, the Dow's going up. It went up 10 points, and he's trying to put a trade in. And I'm like, I get in the way of his like getting to the trade because I'm like, what are you doing? Like, it's gonna hit. Like, I see a small zone, but I didn't know. But I was like, what's your plan here? What are you going to do? He's like, well, it's going up. I figured I could just make, a quick, 20 points or so on. It's 20 points is $100, so he probably thought he could make a quick $100. And I literally saved him some money that day.
Sounds like this guy's doing everything that we just
wrong.
mentioned.
Everything wrong. I want to say his name in case he hears it, but I hope to God he doesn't do this anymore because he just couldn't put the time into seeing what he wanted to see, well, the way you should see it. And he spent a lot of money to learn to trade. Like, yeah, all right. So like,
you pay tuition one way or the other.
Yeah. Well,
do you pay for some sort of mentoring?
He paid at least he bought like a seminar, right? And then some follow-up programs, but never like a hand-holding thing, right? So he goes and he spends 25, 30 grand to learn to trade, and he still can't trade, right? And he's at this. He's not at this like 6 months or so. Like I struggled for a couple months after I took my first seminar, but a couple of months and then a couple of years, two different things.
Yeah.
And total lack of approach. He didn't decide on his approach.
Right.
He went from this to and somebody else the same thing. The old guy in the office never could find his approach. He really was just like, I would buy at the end of the day on a stock that was really strong. Mm-hmm. He was one gap down from ruin. And guess what happened to him? He gapped down on Twitter and it ruined his account. Wow. Only margin call I've ever seen in person. Yeah, 15 grand gone. 15 grand gone.
So I think some of the biggest walkaways from all these and some of the commonalities I think that these 5 points have is really finding a strategy, and then once you have that strategy, sticking to it by taking the emotion out of it, mm-hmm. and really just letting the guidelines of your strategy guide you.
Strategy and tactics,
and follow it blindly. Yeah. And
let it do it. Wait for your picture perfect setup. So find your approach, right? Then know what that setup looks like. Have rules to not trade too much. Have a rule for how much you're going to buy in any good trade, right? No concept of risk reward. Know that if you're going to get into any trade, what is the payoff going to be? Meaning that how much you're going to make and then how much are you going to lose if it doesn't work out. Right. And then on the emotional side, you're never as bad as your worst trade and you're never as hyped as like your best trade. So just because you made $1,000 today doesn't mean you didn't lose $2,000 last week because you're still in the negative.
Yeah,
I think that encompasses everything, right?
If you want to inquire more about Precision Trading Labs and how we trade, mm-hmm. feel free to check out our website, precisiontradinglabs.com.
And if you have any questions, send us an email at ptl@precisiontradinglabs.com. We'll put it in the content of the video somewhere. But any questions about these topics, go ahead and send them to us. So I have no problem talking to you guys.
Thank you.
Cool.